And rock and roll time. There we go. All right, guys, so this is going to be our introduction to candlesticks, what they are, how they're formed, and a tremendous amount more than this. So get ready, ask questions galore. I do not mind, okay? I'm going to really encourage that, because your question that you may not want to ask is, it's probably going to help you and everybody else. All right, so let me just get through this. You can see I've only got 7 slides. Wow, not much, eh? Not much. No, that's because we're going to go over live charts. That's why. Okay. So we'll talk about first the introduction to candlesticks. A candle is a pictorial view of a range of movement of prices. It is the flow of money. This flow of money is displayed in a picture form. It comes with an open and a high and a low, and it has a close, and there will be a color associated with it, okay? Red candles just means that the bears won the fight, and green means that the bulls won the fight. There are a few important things about candles, and the first thing is the range of movement inside of that candle. As an example, all right, a 5-minute candle may have a range of maybe 5 or 10 pips or so. It's pretty rare for them to have much more, okay, unless some news came in and spurred prices to shoot very, very quickly, and then you have liquidity gaps that are formed inside that candle and you don't even know about it because it doesn't print, it doesn't really show. The 15-minute candle can have a much larger range because it's made up of 3 5-minute bars. So a 15-minute candle can have a very decent range to it. All right? And sometimes you can have WRBs. That's wide range bars on an hourly chart that can be all the way up to 50 pips, 80 pips. I mean, you could have a 100 pip long bar, a 100 pip wide candle. Definitely, it happens. So we always want to start our day by doing a top-down analysis of a sorts. That is, looking very well to the monthly chart, the weekly chart. We always start with that. And then we move into the daily chart. This daily is most important for our purposes. And then we move on down to the 4-hour, etc. We just keep going down. We drop down. All of our entries are taken on the smaller time frames. We use this for entries. We use it for exits. The smaller time frames are very helpful to us. We can even use the order boxes that have its little tick chart inside of it. Now the tick chart is just an algorithm going off with little ticks moving around, and you're just looking at a couple million here and a couple million there. In low liquidity times, it might be $1 to $8 million. High liquidity times could be $20 million, $200 million. It just depends what's happening. Okay. Now a run is just a time when prices are very, very directional. It's one way. It's a one-way street. It's difficult for a run to move more than, say, 7 or 8 or 9 or 10. You'll notice I didn't say 7 through 12 bars. You can't tell what a run's going to do. I mean, it could do 7 bars, 8 bars, quit, 9, 10, 11, 12. I don't know how many, but the more bars it goes, the really closer you are to stopping. In one direction, it can't normally do that without having a pullback. It's very, very hard to achieve, and it's very rare. Nothing goes straight up or straight down forever because somebody's always willing to step in and take the other side. A key thing to keep in mind is that each 5-minute bar, 5-minute buy bar, or a 5-minute sell bar, it has to start first with a very good-looking 1-minute bar. It'll usually be wide range, bigger than all the ones that came before it, and it will very often close right at the top, glowing green, or let's say glowing red. All right? And then there is a super-duper high-powered magic ingredient called follow-through. That's the coveted thing that you want. You see a big monster 1-minute sell bar, you would very much love to have some follow-through, where it just rips south for the next 9 to 12 candles at least, right? Okay, so every 15-minute sell bar or every 15-minute buy bar is formed by a 5-minute bar first. And then, again, there's that super-duper magic high-powered ingredient called follow-through. Now, every hourly buy or sell bar, you just have to think about this with me, it's formed by first getting a 15-minute bar and then several more bars of follow-through. So basically what we're talking about is a stall, it's a reversal, and then a trend that is being ignited. The trend ignites the move, okay? And the follow-through is the trend that, that's creating this amazing candle that will grab our attention. And it doesn't just grab your attention, it grabs everybody's attention. I mean, everybody's looking, basically, well, everybody who's a good trader is basically looking for the same thing. Okay, so an uptrend needs to have the moving averages to be separated wide, like railroad tracks. They will also ascend at an angle. Now, the best two angles will be approximately a 30-degree angle or a 45-degree angle. I don't care if it's up or down. All right, 30 degrees is good, 45 degrees is better. And what we want to see is prices pull back occasionally and hit the rising river, okay, if you're in an uptrend. The moving averages will form this river, so to speak, and then you want to see it obey by continuing in the uptrend, consistently making a higher low and a bunch of higher highs. It's a series of that, okay? Pardon me for one moment, guys. I'm sorry. I just have to copy the meeting link one more time. Somebody's asking if they can come in. Alrighty, so a downtrend is the exact opposite thing. The moving averages are going to be descending at an angle, separated very wide. Pullback should pop up, hit the river. Maybe they can pierce it a little bit. That is okay, but at the very most, we are not looking for anything more than hitting the 40-period moving average and then obeying by dropping down and making lower highs and lower lows. All right. We'll talk about a pause bar. It is usually a tight and a narrow range bar of consolidation in a very small time frame. Just because we get a pause candle does not mean that we're going to get a reversal. It simply means that price is being exchanged between hands and it is undecided as of yet. What we are talking about is a temporary breather, just to catch breath and then continue. Now, this is actually a very good thing to see this, okay? A great example would be something like, just 3 to maybe 5 bars going upward on a 5-minute chart. Maybe even stalling, right at a little bit of a resistance level, okay? And then you're going to see maybe a 5-minute pause bar, all right? Maybe a 5-minute sell bar, but then all of a sudden it has no follow-through. And in the next 5 or 10 minutes, it just, boom, goes up, right through it, breaks out, and starts climbing to a new high. Now that is a grand thing, and when you can find that, that is an extremely good trade. You want in on, okay? Reverse this for the sell actions. These are great signs of trend continuations. And now, let us go to our live charts right now. Take a very good hard look at the candles. We're going to talk about how and why they form. I want to go over this very well. So this is the part right now. I guess one of the first things that we could start with, probably, I guess one of the best ones would be to go with CAD right off the bat. So let me find it. I'm looking for it. There we go. All right. Hopefully everybody can see it. Now, this right here is a daily chart. It is a daily chart of US Canada. You can clearly see that there is a resistance zone there, and there. And you can clearly see it way back here. A whole bunch of days. Prices tried to nail a couple of areas, but they could not do so. This is a bunch of consolidation. It's a bunch of pausing action. And then look at that big ignition bar. Okay? Forget right here that that thing says daily. I just want you to forget about it. It is absolutely unimportant whether that said daily or 15-minute or 5-minute or even hourly. You really got to get this, folks. That is not important. I don't care what that says. Forget it. If this was 5-minute, you would know exactly what to do. If this was 15-minute, you would know what to do. So please block that out, the daily. Forget about that. So here we have some kind of chart. I don't know what. Maybe it's a 5-minute chart and maybe it's a 60-minute chart. I don't care. It's breaking higher and it closes green. See, the moving average crossover happened many bars ago. I notice I didn't say days ago because we don't know if this is a daily chart. We don't know if this is an hourly chart. None of that matters right now. Okay? You have a moving average crossover. You have prices coming up and hitting a resistance area, taking a breather, and then all of a sudden, pow. It's big, it's fat, and it's green. And the next bar after it is green. This is very clearly an uptrend. See the 20? See the 40? I can drive my car straight down here. This is like railroad tracks, okay? It's at a 45-degree angle. It's perfect. It's exactly what I want. This is an uptrend. Whatever it is, 5-minute, doesn't matter. This right here is what we often call a flag formation. Okay? And in a flag formation, what often happens is you get a little bit of drifting downwards. Whether this is a 5-minute or a 15-minute or a 1 hour is completely unimportant. It makes no difference whatsoever. The prices will tend to drift. And the reason why is because you have a lot of people that experienced that move. See? They've been in this for 5, 10, 15, 20, 25, 30, 35, 40. My God, they've been in this for almost an hour. See? Or if this was a 4-hour bar, they've been in this for 2 days. If this was 4-hour candles. They have 2 days of movement. And they want to book their profits. So they will tend to book. You're very far away from the moving averages. And often you go sideways through time until you hit the moving average. And then if you get a candle like that that bounces off of it, very wide range bar, you know that you're probably going higher. You don't know it for sure, but you think so. The second bar seems to validate that. The third bar seems to validate that. It's turning green again. It's breaking out. It's going higher. We call this the pause that refreshes. It is the pausing action that refreshes to the upside. You can call this a pennant. You can call this a flag. You can call it anything you want. But the fact remains that the trend is up. We drifted sideways through time, and then we have refreshed to the upside. Now, very often when something like this happens, you will tend to see basically an A, B, C, D type of a move. When something makes an A, B equals C, D type of a move, I don't care what you want to call it. You can call this the flagpole, and you can call this the flag, right? And then you can call this right here the upper portion of the move, right? You know, they have all these names for it. You guys have probably heard this before, okay? It's not really that important what we call it. It's just the concept and the understanding of what it looks like. Okay. So now think about euphoria for a minute. This is a very euphoric move right here. See how many candles it is? We don't know what this is over here. We don't know if that says daily or 1 hour. We don't care what that says. This could be 1 minute charts for all I care. 1 minute, 2 minutes, 3 minutes, 4, 5, 6, 7, 8, 9, 10. Wow, 11. You know, it's kind of hard to go up for 11 or 12 minutes in a row straight, or 11 or 12 hours in a row straight. So think about what's going on. It's a euphoric move, and somebody has to jump in and take the other side. Okay? And this happens a lot. Now's not a good time to Skype me, folks. Okay. Okay. So let's think about how we turn. You see how this is like a warning shot across the bow right here? It's turning red, and then it falls, but still the market makers didn't like that fall, right? Whether this be a 5-minute or a 15-minute chart is irrelevant. So they attempted to make the prices bounce again. Pardon me. Prices did bounce, and they even broke out a little bit. You can see they broke out of that top right there, and they went a little bit higher. See, just a small amount higher. This is often simply a stop out area, okay? A stop out area for somebody to eat some stops up and then turn around and drop it. Notice that the bar that came right after it is exceedingly red. Now, when we are talking about buy setups and sell setups, what we mean is this right here. If you break the low of the wick and take off running, see, this would be called a piercing bar, a reversal bar. It's bloody red. This is a sell bar right here, and once it cracks that previous low and starts to go lower, this is a pseudo sell bar. Why do I call it a pseudo bar? Well, it's not finished. When it's breaking the low, it looks very good. Remember, we don't know right now what time frame this is. I don't even want you to think about that. I don't care if this is daily, 4 hour, 1 hour, none of that matters. If this was a 1 hour bar, in the first 15 minutes or maybe the first half an hour, it's breaking that low right there. So it's a pseudo sell bar. But as the hour passes and comes to a close and closes way down here, darn, that's a good looking bar. Okay, it's blood red. So that is what we want. We want something like this for a sale. Now, please notice it dropped for 3 bars and then it got a lift. Here's your green candle. This is often what we call the hook. It can often hook back up and go even higher, hooking right up to there to kiss one time the little breakdown spot and say goodbye. And it's all over. It's usually all over after that. But where are you going to put your stop loss? Well, technically your stop loss would go a couple of pips above that high, that previous high right there. So this is like an entry, and that's your stop loss, and you just ride it.
Look out for this squad really.
Sorry, have to mute him. I forgot all about the news guy. Forgive me. So basically what we are looking for is upward movement, pauses that refresh, breakouts. We're looking for sell bars. We're looking for something to be very far away from the moving averages and to come on back down. Now let's go into something a little more recent. Now you know, as I've removed all the lines, you finally found out that this was a daily chart. So still, get rid of that D in your brain. Don't look at that. All right. If that was a 5-minute sell bar right there, this one, how many bars can we expect it to drop? Well, I don't know. How many bars can a 5-minute sell bar drop? Sometimes they'll just drop 3 or 4. Sometimes they'll drop 10. Sometimes they'll just rip 20, not 20, but 12. Okay, let's count it. 1, 2, 3, 4, 5, 6, 7, 8. Hey, that's incredible. Like I said at the beginning, really hard to get something to fall 7, 8, 9 days in a row, or 7, 8, 9 bars in a row. So if you were to sell this, and let's pretend right now this was a 15-minute sell right there when it went through that low, where does your stop loss go? Right there. Just a couple bars before it, there's your stop. There's your ignition when prices drop through here, and you just hold on for however many candles you can. But when you see this candle over here, that is a great big warning. 8 days down, turned green. I'm sorry, 8 15-minute bars down, turned green. Time to get out, okay? So what we do is we look for the entire system that we're talking about here is the understanding of what's going on with the candles. Channels are pretty cool. We like channels. That's just fine. Stochastics, they're okay. They help out a little bit sometimes. They help out a lot when you see stuff like that. That is not a sell. And I can tell you what, that right there, that's not a buy. Guaranteed. Not a buy. That was where it was not a sell, and that was where it was not a buy. The next thing we add into our candlestick equation, right, is the continual use of things like Fibonacci. We never want to sell something that it is an 886 fib. This is the magic fib box. We want to sell things like that. Okay? And we never want to, please give me 1 second. Fib Retracement. Here it is. And maybe even over here as well. We never want to sell anything like this. You don't sell that. These are buys. So the candles are a large pocket of orders going off. Drop down into some other time frames here. Just go into the 1 hour, okay? Now we're looking at 1 hour. Remember what I said about the trend? The moving averages have to be like this, separated wide. Okay, that one actually shouldn't be there, the green one, because that should only be on the daily. So try and disregard that, all right? Let me see if I can get rid of it. Wow, this really isn't the time to do that, but yeah. Is there any way for me to just get rid of this thing? Sorry. Edit studies. There. Oh, no, not that one. It's the 55. That should only be on the daily. Okay. So, again, moving averages like this indicate the uptrend. All right? Whenever you're above the 200 MA, whenever you're facing like that, that's the uptrend. Basically, we just want to seek pullbacks into the river to get long for the consistently higher high, higher high, higher high, higher high, see? And all higher lows. There's a higher low, there's a higher low. That even is one right there, even though it's only by 3 pips or so, 5 pips maybe. This is what you want to see. But eventually, all good things must come to an end, because the market is a giant oscillator of strength and weakness, and everything good has to come to an end. So, when you see a little stop run like that from a previous high, and it's followed by a monster sell bar, this monster bar is highly indicative of lower prices to come. Please look how long it took. It was a huge wide range ignition bar. You should be able to see that. It's really, really big. Okay, 130.82, 130.82, and 131.40s. Guys, that's a 60 pip bar. Okay, I don't know if you realize that, but that's 60 pips, and that's a big bar. Right there, that big red one. So because it's an indication of lower prices to come, and because we eventually see the moving average crossover, think about what makes the moving average crossover is this sideways action right here that we just talked about, the pause that refreshes. Okay? Once you see something like that, you really have to wait. You really got to wait. But if you sold in this bar, okay, that would be your stop loss right there. And once you get a second bar drop, a big sell bar like this red one right here, notice how wide it is. From 130, it's almost 131 to almost 130.16. My gosh, it's almost an 80 pip bar, okay? 80 pips in 1 hour. Where would your stop go? You'd move your stop right to there, okay? Or at the worst, you'd move your stop down into to here. So we're talking about stop placement right now. And you just want to let the thing go because the trend has the power to go further than you ever think possible. Here it is just rocking down. The trend is rocking down, okay? Now, sometimes you'll get very big pushes, like this is one push, then there's some sideways action. Here's like a second push bar with a bunch of drooping, and then notice this one here, this is like the third final, give up the ghost situation. This morning we were long, and we were in a little bit of pain, and we were waiting to see if this was gonna, break out above the morning high right there, or if it was going to crack the morning lows, the session lows right there, and have any kind of additional follow through. But now with our beautiful gift of hindsight, okay, take a look at it. What actually happened? Well, something happened early in the morning right around here. Prices went down, okay, and all they did was flush a few stops. You can see how small those pips are. And then you see this gigantic hourly buy bar. It's the exact reversal of everything we've looked at until now. This bar is highly indicative of higher prices to come. How long does it take? Well, I don't know. We could go sideways like this for quite some time, all right? Or maybe we'll even end up flagging. I don't know. If we flag, it will look something like this. Okay, there will be some small drop, but please notice that the red is going to end up fanning out like that. The blue is going to end up going this way, no matter what. And I'll take that flag if that's how it's going to happen. We want to get long. As soon as this drips back into the moving averages, and this could be many hours from now, we'll have a pullback like this and a breakout that comes up here and attacks this price. Maybe it even gives us a pause bar, okay? A small pausing action bar on a 1 hour chart, very tight, very narrow range like this, and then afterwards up. That's what we want to see. Okay, I hope that makes sense. Maybe we could look at some more examples and go into shorter time frames. That would probably be good. Let me think for a moment. This one might be all right. I see that this says green. It does not look like I'm online right now. I think I am offline currently because I don't see the green. So something is a little bit wrong, but at least I have, at least I have charts. But this doesn't look live. Okay. So another thing we want to talk about too is how sometimes you can get extremely far away from the moving averages, and I want you to think like the moving averages are like the parents, and they're speaking to the candles, and the candles are the children. And sometimes the children are very naughty children, and they run very far away from the parents, and the parents are yelling to them and saying, "Oh, children, you're too far away from me. I cannot see you right now. Come back." I don't know if you have children or not, but I do. And when they were, when they were between the ages of 5 and 8 or 10 even, they did that a lot. They were always testing their boundaries. They wanted to see how far away from mom and dad could they get. So they would go away from us until we could no longer see them or hear them, and we'd have to call for them, and then they would say, "Come back," and they would come back and revisit us. All right. So right now you can clearly see that we're below the 200. So this is a definition of a downtrend. We're below the 200. We also see, please forget the green one, that actually shouldn't be there, but we see the moving average crossover of the red and the blue, which is the river that we talked about. This is the river banks. Please notice all these pullbacks to the river, how ridiculously obedient it is to the river. Sometimes it'll pierce the river a little bit and freak everybody out because it hasn't been formed to perfection at the beginning right there. But over here, it's all pretty obedient. Now, when you get too far away from the river, you tend to need a snapback. So there's your 4-hour hammer. We'll call that a hammer bar. I'm sorry, it's not exactly a hammer, so I'm incorrect. But it is a warning reversal. It's green. It had a little bit of follow through, but not much. So prices appear to be stalling right now. And what would my thoughts be on this pair if this was like, I don't know, 5-minute chart instead of a 4-hour? Well, if this was a 5-minute chart instead of a 4-hour, I might expect a retest of that low, a bounce back up to break a little high right there, and a snap back into the river. This is going to point down like that no matter what happens. And this one, even if we go up, will start to fan that way. Not straight down, but more like this. Okay? Stochastics are pointed upwards, so that's also a little bit of a help. Like I said, we don't really put too much value in this except for at certain times when it's very, very crystal clear. But it does look like this will go higher. All right? Let me drop into some lower time frames if you don't mind. I want to put some, well, let's see here. We'll put some other time frames on. Here we're going to look at the euro pound. You see this A, B, C, D thing that I talked about. Okay, that being A and this being B. Okay? This being a C area, we can clearly see it, and this being D. Now, again, it doesn't matter that this says monthly, okay? Just forget that. It could just be an hourly chart. Bunch of bars up, 4 beautiful hours higher, and a couple of hours down. Sometimes it'll come right back to support, and sometimes it won't. I mean, you might want it to come to hourly support, but it might not. Okay, it might not come and completely kiss it. Doesn't matter. But you can still see the supportiveness here. So if you had 4 hours up and a couple hour retracement, what is it doing? It's just catching its breath again, right? And this big 1 hour bar is highly indicative because it closed right at the top. It's highly indicative that prices are going up higher. Okay, turns out this isn't an hourly chart, which is just fine, and this is a monthly. But you see the ABCD pattern, and you see a pseudo sell bar. Now remember, the pseudo sell is not finished until the bar closes. Now because this is a monthly chart, that could take quite a while. The stochastics, I mean, you know, I don't know where this is going to close in 20 days, 22 days or whatever. But if it closes here or lower, or if it closes here, okay, that is a screaming monthly sell. Now, we look at our daily. There's our uptrend. What does this actually say to us? If this was a 5-minute chart, what would it say to you? Okay, it would say, oh, there's some small, weak, pathetic 5-minute sells. They're not very big, but they're a warning shot to me. Okay, and I would expect these 5-minute sells to eventually result in a multi-down move. Turns out it's a 60-minute chart, but I don't want you really thinking about that. That's not important. It's the candles. Okay, so we are expecting Euro Pound hourly sell action to pull us back into the river. Now, how do I know if it's going to stop at the river or not? Well, I don't. You see, I cannot jump into the mass collective market mind, read every single trader's mind, and read every single trader's stop losses, read where they're going to buy, read where they're going to throw up, read where the market makers are willing to press it to. I can't do that. There is a mass market mind, and it exists of thousands and thousands of bank traders and market makers and scalpers and position traders of every sort, and they make up the mass collective market mind. And I cannot know their exact numbers or their exact threshold of pain. I don't know that. And I don't have to know that in order to make money. You and me don't have to know this thing. But we do have to understand what a sell bar looks like and what a potential is for a pullback. This hourly is saying, down, boy. And it could easily come right there. Right there. See it? Now, if it breaks the 20 MA, remember, you still have the 40 backing it up. It's coming up here. So that's why when we're trading, sometimes, especially when we have, like, let's say we had a 0.1 or a couple of quarter lots or something, you pull down here and nail this price, you're going to want to take half off, okay? And the rest you would put an in-the-money stop for maybe, you know, in the money plus a couple of pips, just a few, 3, 4, 5 pips for your time, okay, for the back half of the trade. Because you don't know if it's going to stop there. Maybe it rips right on through and comes back here and hits into this new part of the upward river. You see the moving average crossover? It is an uptrend. Okay, that is an uptrend. When in doubt, ask a kid. Is this up or down, or what is this? It's an uptrend. But just because something is an uptrend doesn't mean it doesn't get a pullback. All right? So, what are these big reversal bars? You see that one that we called yesterday? When it was happening. When it was happening, I said, watch out, right? Because this thing could easily be a wicked reversal bar. And it was. And you see how they pulled it off the lows and it broke above that high. Now, here's how you can enter. The more daring person who has a little, let me think of the right words here, a little bit more oomph, okay? A little bit more risk. The daring person a little bit more daring, not too much, we're not gamblers, will often enter right as something is forming and happening. He doesn't want to wait for the bar to close all the way up here, okay, to get up here before buying, or to close down here. He'll try and buy right above that candle, or even before it if he sees it happening. So this would be your proper entry, and this right here would be your proper stop. Technical stop is right there. And we talked about that thing yesterday when it was happening, and I said it's just going to go higher. It's most likely going to go higher. But look what happens after a big pull away bar like that. You'll often have a retest. Here's your little bit of a retest into the zone, another small one, and away it goes. But like we said, it has to do some kind of pause actions before it can refresh. Look how many hours it took. Guys, this was like an 8-hour day, okay? 1, 2, 3, 4, 5, 6, 7, 8. It was 8 hours before it finally broke that high. Now, can you handle that? Are you okay with it? Are you okay with holding something for 8 hours as you're waiting for it to break out and go higher? I mean, your stop is in place, right? You already saw the candle. So this is where we get into the intraday swing trade type stuff, or even overnight swings, is where you put a trade on and you're just going to have to wait for many hours before you finally get it to do what you want it to do. Notice how it came back and retested once and even a second time. You see it? Those were two brutal retests right there. And somebody had the patience and somebody held on. I'm sure of it. And away we went, finally. So think about what's happening in here, in this 1 hour bar. You have scalpers that just want out. Okay, the scalpers are like, hey, that's enough for me. Get me out. And they're gone. All right, I'm going to go down the 5 minutes so we can find it. See? Here's your two retests. And your scalpers in the 5-minute charts. They saw this action and they said, I just want out. I just want out. And they bailed here, there. Some of them, they just bail. And then there's a big pullback again, another retest into the river before going higher. So that's why we use these moving averages to help us too, because anytime you can get something to come back into a 200, you know, it's usually quite a good long. And same thing with, you know, reverse. All right. What other chart should we look at? Can you guys call one out? Anybody? Miguel, I can't even look at that right now. Oh, you are right. Yes, it is. I just turned my head and saw it. Oh, my. Crude is certainly ripping. I called that thing long 5 times today, and I'm in pure agony that I did not stay with it. But, hey, you know, what can you do? Crude is way over target, by the way, guys. So, does everybody understand this? And please, if you have any questions, please ask them, okay? I really want you to ask them. I'm serious. Just ask away. The whole part that we talked about, just like we did in the beginning, is that every 4-hour reversal bar starts with a 5-minute buy. The 5-minute buy, hey, it just happens to have some follow-through that creates a big 15-minute bar. And that 15-minute buy candle will also happen to have some follow-through, because that is what ignites an hourly bar. And any bunch of hourly bars with a whole crap load of follow-through is going to end up giving you a 4-hour reversal candle. And that's how things are formed. That's how it works. That's how they turn green. There's all kinds of retests that happen, so you never have to chase a trade. You can always get back in on a lower time frame. You can always get back in. Don't want to chase them. All right, but this is a quality move. But you see how right now, even on the 4-hour, it's hit the downtrend. It's hit the river. Okay? The parents have called out to this trade and said, children, you're too far away from me. Come back, children. And they did. Now, why is it pausing? There's a few reasons. Number one, you have the moving average. Okay. But number two, you've got this right here. Prices really and truly actually did try and go higher right there. Okay? But they didn't. For whatever reason, they just did not. Whether it be the mass collective market mind, whether it be the market makers, I don't care how you're going to view this thing, prices could not go above. It is a visual, it is a highly visual thing. They couldn't go there. Tried, failed, done. So this is now resistance. And in this resistance zone, there is going to be a reaction because you have bag holders. Bag holders simply means people that tried to buy it and they held through this whole swing down. And they were like, oh my God. And they're praying. They're like, if I can just get back to break even, I will leave, I will get out. Even if I'm close to break even, I will get out. And so that's exactly what they're doing. That's why there's a stall and a reaction here. They're very close to break even. All right, you got to think about how many candles this is, guys. That's 1, 2, 3, 4, 5, 6, 6 times 4. That's 24 hours of trading, okay? So you have an awful lot of buys and sells that took place at this price before, and these people are puking it back up. They're like, here, take it from me. I don't want it. And they're getting out. Okay, could I explain the magic fib level box? Absolutely. Absolutely. On any series of charts that you look at, you will see that the market loves to do swings between certain Fibonacci levels, okay? And, well, let me think here for a moment. I'm just trying to think of which one would be a really great example right now. I don't know. I'll just find it. Is it going to be on this? No, probably not. I guess the best example that I currently have would be some of the CADs. I really hate looking at the yellow there. This is supposed to be daily. Am I correct? Okay. First of all, with fibs, you have what's called a fib retracement. It comes from a swing high and it drops all the way down to a swing low. There's your high and there's your low. Now, these fibs right here are fantastic. This is the 786 and the 886. I call this the magic fib box because we never want to buy that, not on your life, and we never want to buy that. This is a sell area. When something pulls up into a 786, 886 fib box, it is a sell. 80, 90% of the time. I'm not saying 100, but I will tell you that 80 to 90% with ridiculous consistency, this turns out to be an area, believe me, you want to sell. You do not want to be a buyer, okay? And especially when you can mix it with something that's very powerfully visible. And by that I mean that candle. That candle. Right after it, candle number 2. Oops, I'm sorry, candle number 3. Oh, wait a minute. Whoa, there's more. Candle 4. Oh my gosh, it just keeps going. Candle 5. Whoa. Candle 6, candle 7. Okay. Do you see how many days that held? That was just support. It's nothing but support. Prices absolutely refused to break down. They would not. They said, hell no, we will not go. You won't make us. And they held like a rock. Once prices finally busted that, somebody took out a skill saw, drilled a hole through the floor, and dropped a rock into the basement. It hit the basement floor, tried to bounce up into the upper level, and when it hit it, oh my God, down it goes. Okay, see it? That right there was very supportive. Here's your fib box right here. Don't really want to pass that. Where would your stop go? Right there. Okay, that's where your stop goes. And then all of a sudden, kapowie. Now that may not be the greatest example because I just chose pound Canada, and we all know that the Brexit happened on that day, so I could pick something else. Here, I'll just go to I'll just go to U.S. Japan. All right. We're looking at a daily chart of U.S. Japan. Watch how many times this happens. Okay. Watch how many times. Swing high, swing low. There's a 618 fib that got nailed. Oh, I guess it didn't make it over there. Okay. Never made it. Okay. Swing high, swing low. There's one. Now it came up into the 786 and the 886 fib. And down it went. That one worked. This may not be. Okay, that's not so. The other thing is sometimes they will do little fib extensions. I forgot to tell you about this. This is something I wanted to talk about. Fib extensions are when, let me see if I can find it here. Is this it? No, that's not it. Swing low, swing high. Okay. I know that we used this today earlier on a different pair. What was the pair? It ended up going oh, I know what it is. It was New Zealand dollar. Please just bear with me because my brain, it's been a long day. We've been trading and it's been a long day. Okay, and I'm a little tired, so I'm just trying to find it. I think it was over here. I don't know why I've lost it though. I had a fib retracement somewhere in here. No, that wasn't it. It was a fib extension. We ended up hitting a 618 fib level. Can't remember where it is from. No, it's not there. Yeah, I've completely lost it now. I don't know. I lost all my lines, but I did have it in there. I did have it in earlier. Somewhere in here. This right here is a 1.618. So what I'm trying to say, let me just go ahead and put the lines in, and you guys can remember this. The fib extensions are this. They are the 127, the 144, and the 1618. These you want to pay close attention to, especially when you have a fib confluence on another time frame. So if we were looking at this on, say, the weekly or something, or yeah, maybe the weekly, and you were to see from swing high to swing low that you had a fib in here. Okay, I know we're not there right now, but let's just pretend for a minute that we were. All right, there's a fib confluence right there. Okay, so if you came up and hit a 50% fib along with a 1618 extension, that is an area that a lot of people take very, very high notice of. Okay, really big. It's almost okay. It's like this. You're trying to scale your trade. You want to rate your trade on a scale of 1 to 10. Is my trade really good looking? Or is it just okay? The more good looking is the more things that you can find together. All right? If you can find this right here, a 50% and a 1618 extension, and let's just say that this 200 MA happened to be right there too. Okay? Now your scale goes up. See? Number one, I've got a fib confluence. Number 2, I've got a 200 MA. Rated even more. Let's say that you had a candle that came right up here like this, closed brilliant green, and then all of a sudden you had a candle right after it that closed brilliantly red. All right? That would be another beautiful sign. And even better if the stochastics were way up here like this, completely buried in the top, and then started to fall, started to actually cross over. You're trying to rate your trade based on a multitude of factors together, and they really help. I don't know if that answers the question. I hope so. I mean, I didn't have any live, I didn't have let me put it to you this way, guys. I did not go through and cherry pick a whole bunch of slides, going way in the past and grabbing things and saying, oh, this looks good, I'll grab this one, and oh, this looks good, and I'll grab that one. And I didn't sit here and do a whole bunch of PowerPoint screenshots trying to just show you something all, made up, okay? But if you will backtest this, you'll see what I'm saying. This is often a fantastic place. It often works very, very well together. Another thing we want to talk about, not just in conjunction with the candles, but it's also supply and resistance zones. That's another thing. You should be able to see right in here that this right here was really good support. I don't care if this is an hourly chart or 15-minute chart, whatever it may be. This was a really great support. But it got broken, okay? And when it got broken, it came back up here and retested at one point, right? So isn't it good to sell stuff like that? I mean, just pretend this was, 15-minute chart or an hourly chart, okay? And you saw this chopping around for a whole bunch of hours, and the next day it fell. And then in, half a day, you wake up at 7, 8 o'clock in the morning, New York time, it's 9 o'clock in the morning, you've just had your coffee, and, you see this at 9 o'clock in the morning. Isn't that a great place to sell, okay? These zones like this look really, really good. And they're decent places to look short. Remember, the river is a downtrend. The river speaks highly. Pay attention to the river. Okay? Is there any other questions? I don't even know if I've covered this in fullness. This is just introduction to candlesticks. I probably have left a tremendous amount off of the table that I have not talked about. Anybody have any other additional questions that I could help with? The river is very valuable. The candles speak volumes. They are the footprint of money. The footprint of money. Can tell you a lot of candles to avoid. Just here on the Eurodollar, for instance, in a 4-hour candle, what does that candle say to us? Guys, pick a chart. Pick any chart. Give me any chart at all. Any time frame. Let's talk about it. This is your time right now. I'm not doing this for me. So somebody pick. I'm sad I've only got 10 people in here to do it. But look, what does that 4-hour candle speak to you and me? It is simply a wick to the top and a wick to the bottom and a super, super tight closure. It's a candle of confusion. It's indecision. It's confusion. It was just a stop run to the highs and a stop run to the lows. It doesn't mean anything. This candle just means nothing, okay? There's no power. There's no conviction in this candle. I'll tell you where the power and the conviction came in. It was for the 2 or 3 days. Now this is the Eurodollar on a 4-hour chart for the 2 or 3 days or so that I kept saying, long it, long it, long it. We were talking about going long. Why? It's really simple. Why? It was a piece of cake. Why to go long? Okay. The daily chart told us to. Hold on. We'll wait for the moving averages to catch up. Give it just 1 second. I see I'm already over time. It's 5 o'clock. If you have to leave, I understand. You can always come back and watch the rest later if you want to. But please ask questions if you like. I would really love to see some questions, and I don't see any, so it's kind of sad. Take a look at the candles. 1, 2, 3, 4, 5, 6, 7, 8, 9. I believe by the time we hit the 8th day, I was saying long it with a stop loss potentially right underneath the 200. I'm very sure I called it long on the 9th day. Pretty sure even on the 10th day we talked about it long. There was a bull harmonic, and the bull harmonic had a 1240, I think it was a 112.40 target right there on the hourly chart. I think it was. I'm not sure. I can't remember now. Doesn't matter now. But you see, it went up and it hit. Sure, we can go over odd New Zealand. Absolutely. Okay, so with this 4-hour candle, you can see it says nothing at all. But what the rest of this says is crossover, uptrend developing. There's the blue. There's the red. There's the black. It's going to go that way. Okay? So sliding sideways through time on euro dollar, possibly flagging, and then going up. You see my point? We're looking at the moving averages seem to indicate that. Okay, Mango, have a great night there, buddy. I'll see you later. Okay, see you tomorrow. All right, odd New Zealand. Trying to find it. Why is my eyes not seeing it? Something's wrong here. Didn't I rearrange these? Oh, I had chart trouble and I had to change my screens again. That's great. So now they're all out of whack. Okay, I'll just have to redo them. All right, once again, I'm not live. If you look over here, it says yellow, and that yellow means I'm currently not live. This is, it's supposed to be green, and it's not, so something is really, really wrong. I'm just waiting for everything to catch up, okay? Give it a couple minutes, a couple seconds. Alrighty. So the monthly chart is indicating a bottom here and a top here. This spot used to be supportive and completely failed. This sort of looks like a left shoulder, and this sort of looks like a head right here. Okay. And this kind of looks like a right shoulder, but not really, because it's a little bit weird to have a two-shouldered monster. But every once in a while you do see weird things like that occur. Okay, where you get something that's just abnormal, and it is. That's abnormal. This, in a sense, would be your neckline right there. I'm sorry, don't even have it in that well. That would be your neckline. Okay. So with our understanding of, candles and price action and blah blah blah, it does appear that this is trying extremely hard to make a bottom, and that at some future point, I don't know when, it could be many, many months from now, that prices are going to want to come up here and at least test this spot. Maybe they won't be able to break through. I don't know. Okay? But at least test this kind of a, neckline or trend line or whatever you want to call it. It does look like 112 should come under fire, even if it's 6 months from now, 8 months from now, it appears that this could happen. If this does happen, we don't know. The market makers may be able to push through by some amount. How much? That I cannot tell you. I don't know how much. I can't jump into the mass collective market mind. But I can clearly see that there's a 382 fib up here. And all I know is that should we ever make it here, there will assuredly be a reaction. I can guarantee you. I don't care if it's 6, 8, 10 months. You ever get up here towards that price of 114.5, there's going to be one monster stalling reaction that will occur right there. If it happens, it's going to really pull back. Okay? I don't believe they can have the power to shoot it straight up to a 50% fib or up here to a 618 level in any kind of a short order. I mean, my God, we're probably looking at multiple years to do something like this. Okay? So there's our monthly. Now, the weekly, we probably have a little bit of a fib extension below. Yeah, it looks like we do. It's about a 127 if we're going to draw it from here. Yeah, either way, we're pretty close to 127 extension to the south. Okay, so we don't have a weekly buy yet. We had one, and there was some nice follow through, and it got retested and it went higher. But right now we don't have a weekly buy. So at some point, these stochastics are very buried. You're going to expect this to go like that and eventually pop back up again. Now this would probably take several weeks for that to happen. Okay, but there would be a move that would come up here. Who knows, maybe 107, 107.5, but I doubt very much beyond that because you still have all this moving averages to contend with, and all of that is nothing but resistance, resistance. It's very clear. Tons and tons of resistance right there. Okay. Looking at the daily, I don't see it right now, but it almost appears like this is trying to make a bull harmonic. So we go from this bottom to there, and I don't see it right now. I'll have to check my charts and see if that's even a reality. This may not be real, but my eyeballs are kind of seeing it. It looks like that's a bullish something. Okay, a reaction line would be way up here. But I see no daily buy signal. I just see a big confusional bar. Lots of downdraft. Don't really like that. Not very happy about it. You know, I'm long 3 pieces and not completely thrilled. If we need a stop loss for this, which, you know, eventually I'm going to have to think about the thing too, we can choose. Is it going to be here or would it be over here? You know what, guys? Something's wrong with my charts. Remember, I'm offline right now. It's yellow. So this isn't even accurate. I'm sorry. This is not even accurate. It hasn't updated. I apologize for that, but it's not real. This is an incorrect chart. Don't trust it. It's not correct. Darn. I don't know how to refresh it right now. Try really hard to exit and see if we can reopen really quickly. I'm just going to clear everything. Oh, now we're green. There we go. Finally. Okay. Much better. Yeah, this is really, really ugly, as a matter of fact. Yeah, it's just not good. I got caught on it. It's not good. We've already broken that low. So yeah, it's a really bad it's a bad trade. Like I said, I've got to wash out of that trade. I've only got 3 pieces, but I have to wash out. Mark D, you have a great one. Okay, I know you have to fly. That's fine. Okay, guys, I'm really over time. I'm beyond an hour. I'm at like an hour and 15. That's kind of bad. I don't like making these videos that long. Anybody have any questions on something that I covered, or if you can't think of it right now but you think of it later, could you shoot it to me, either in an email or through Skype? Skype is the much better way. And what we could do is go over this again, candlesticks, another time. All right. I'm sure I've forgotten things. I'll watch it myself. I'll try and write down what I've forgotten about. Okay, I don't see any other questions, so I think what I'll do is I'll just end it now. All right, and I hope that this was a help. So anything that I have not covered in here, future people that are watching this tomorrow, the next day, next week, next month, whatever, I do hope your questions are going to be answered in a future video, okay? But if I don't cover it in this, and I don't cover it in another one, then shoot me that question somehow, and I'll get you an answer. How far do stop runs go? Well, okay. Stop runs will go as far as the market makers want it to go, for the purpose of collection on the other side. Now, it comes with a cost. There may be a cost for them. You know, they might have to spend $20 million or $50 million in order to run a bunch of stops. But if they know that they can make 200 million, like, it's just a cost analysis. If they spend $50 million to go ahead and make $200 million, would they do it? Yes, they would. So that's exactly how it works, okay? They will count their cost and see what they can do, all right? How far do stop runs go? It's really a relative thing. I mean, let's look at the pound right now. All right, we'll just take a look at pound dollar as an example. What do you see in the last couple of days? Right, I see this was a very powerful place that, you know, nobody wanted it to go to, I guess, except for the bulls. I do see a topping tail there and there and there. I mean, my God, they fought it for 3 days. They fought it very, very hard. How far did this stop run go? Well, it looks like it went from 133.76 to about 134.45. Okay, so that was a huge one. I mean, that right there was monstrous. You know, if we can actually count that as a stop run. Usually what happens, like with today, with our euro dollar, and how we talked about the stop run this morning on the 5-minute chart. Remember, from very first thing this morning, we said there's your, let me just do it again because I've lost all my lines. There's your midnight candle, where the blue line is. And then I had talked about this and said that's where the stops are located. And so after midnight, they ran it from here, and they ran it from there, and they popped it how much? Well, there's your London stop run, okay? How much did that stop run go? Let's just count it. Let's count it. It was 112.58, basically, with another layer at approximately 112.63. So we went from 112.58 to 112.65. Okay, that wasn't even 10 pips. There's your 10 pip stop run. And what did they do after that? Nailed it straight down. And I talked about that this morning, that there would be stops under here and under there, right? And look how far that stop run went. Just a couple of pips, not much. And then we talked about it again this morning, that we said if it goes above 112.65, just get short because it's probably a stop run. And you can see right there, how much did we move? I have a cat screaming at me. Pardon me, guys. Just chill, kitty. Chill out. 1263. Okay, that was about 8 pips, and that was about 5 or 6 pips. That's all it was. So stop run is complete, and then they ran it back down again. So it's usually not much on the euro. It might be 5 or 10 pips. And on the pound, it can be more. All right, guys, I'm gonna have to kill it for now. We are at 1 hour and 20 minutes. I gotta end this video. I'll process it. I'll upload it to the website, and just let me know of questions later. I hope it was a help. Okay, we'll do this again at another time, and hopefully make it more complete, more synergistic, whatever you want to call that. All right. Okay, we're done.